A commercial mortgage is basically a charge on generally any property that isn't your main residential property. Generally, you'll see deposits somewhere between 25% and 40%, so more than you would expect on a residential property deal. The 25% deposit will tend to be for owner-occupied businesses, where the business itself or the director have bought the property for their own business to trade from. Other deals will tend to run between 30 and 40% deposit, depending on how the lender views the risk. Typically, it'll be between 10 and 25 years, again depending on the individual business circumstances and what the lender's willing to do. These are different from residential mortgages, so typically what will happen is the business owner or the person proposing to buy the property will come to me, have a discussion about the building they want to buy and about their business, and we'll have a look at the level of deposit they have available and the affordability to service any debt they might need. From there, with our experience, we can quickly assess whether a particular project is likely to be affordable for your business. Two examples of deals we've had approved recently, one with a mainstream bank and the other with a bridge and funder. So the deal with the mainstream bank was for a business that had been trading for roughly 5 years. So it had a proven trading history, was in the hospitality sector, so it had a bit of work to demonstrate how it had coped during COVID and how COVID might impact going forward. But ultimately we were able to do so because of the appropriate accounting information in place. We were able to secure that deal over 15 years at very competitive rates. The client put down a 40% deposit, but actually saved about £3,000 a year on the loan payments for the next 15 years as compared to the current levels of rent. So it strategically secured the premises for the business, reduced their overheads, and ultimately gave them an asset that over time they will own outright. The second example I want to talk about was a relatively young business, trading actually less than 2 years, performing well and had the evidence to back it up. So they had all the financial records and management information available. They had a property in mind that they wanted to buy. There was a lot of competition in the local area for the property. This was a bigger property and in a better location where they'd been trading from before, so they felt it would bring growth and volume to their business. But they had to act relatively quickly. It was too early for mainstream banks to fund the business, so we had to use a bridging finance provider to provide the finance for a short-term period until the business itself could produce its second-year accounts, and then we could refinance the case with a mainstream bank again. So the benefits to the business were it supported their strategic growth, gave them access to a premises that they otherwise would have lost to the local competition, but it also gave them access to a funder that they would have been unaware of. Alternative lenders are keen to work with businesses and they're keen to get a return for their investors, so they can often help in these types of scenarios. They may come at a slightly higher cost, but you have to make the decision whether that represents good value for your business. If you're considering investing in commercial property, then by all means get in touch with us today and we can have a discussion about your particular scenario and how we can help.